Hello all, I'm Kerry Lutz with Bill Powers. This is a production of Mining Stock Educators, and joining us today, a person I've come to know quite well over the last several years, Haya Don, President, CEO of Osino Resources, a born and raised Namibian mining engineer who has an impressive record of success with two of his prior companies having been profitably acquired. Also with us, Dave Underwood. Dave is VP of Exploration and has 28 years of broad exploration experience in Africa and well beyond. Like I said, been following Haya and Osino for several years, long-term shareholder. During this time, Haya, you have moved Osino Resources rapidly ahead, and I've always been impressed with your ability and your drive. Haya, Dave, I want to thank you for joining us. We're all looking forward to hearing the latest developments and your plans for the future. So on that note, please begin.
Yeah, thanks, Kerry and Bill. Welcome everybody. Thanks for being on the call. I thought I would just update everybody a little bit on what Osino is doing before Ondundu. I know the purpose of the call is to talk about Ondundu, which we will do, the transaction that was announced a couple of days ago. But I see we've got a bunch of new listeners, so I'll just spend a couple of minutes, maybe 5 or 10 minutes, talking about Osino generally, and then how Ondundu will fit in with our plans. On the intro, yeah, Bill, sorry, Kerry, thank you very much for that. We appreciate your support. I know you've been around for a long time, and you said it there. I think our sort of key strength and what we've been able to demonstrate so far between Dave and I and the rest of the management team is that we're very good at getting stuff done. We're very good at turning dreams into reality. I mean, to remind you, when you first became a shareholder, Osino was just a dream. It was effectively the idea of making discoveries and advancing, making significant gold discoveries and advancing them. And I think we've had quite a lot of success in doing so over the last few years. So what you're looking at here on the screen is our core project, the Twin Hills Gold Project, which is currently 1.9 million ounces in inferred and indicated drilled out. We had a very large year last year. We drilled almost 120,000 meters to get it through the resource definition stage. The project was discovered in 2019, spent 2020, 21 advancing it substantially. And this year, we are getting heavily into the feasibility side of things to push the project forward to construction. So that's Osino on a standalone basis. So it's progressed well beyond the dream stage. But of course, growth and scale is always important. I think one of our Achilles heels, so to speak, is the fact that we are, you know, it's all relative, but we're relatively small with 1.92 million ounces growing. But we've always been interested in making accretive bolt-on acquisitions. There are not many of those in Namibia. And so when Ondundu came around, we knew that this was an excellent fit, and I'll explain to you later why we say that. Obviously, just bear in mind, you know, all the disclaimers. You know, I'll be making forward-looking statements, and bear in mind 43-101 requirements. So in summary on Osino, we've got the high-value Twin Hills Gold Project. It's being fast-tracked to development. We're hoping to make it one of the fastest discovery to production stories around, and we're on track to deliver on that. What sets it apart certainly is its low technical, geological, and metallurgical risk, and we are right now in the process of substantially further de-risking it through technical studies and feasibility work, and we'll update the market on that in the next few weeks and months. Also, it's quite a low capital intensity project with very manageable costs. We've got a proven team. We've done it all before, both exploration-wise. Dave has had a lot of experience and so forth, but also on the project advancement and even on the production side. Also on the capital side, a lot of experience with my co-founder, Alan Friedman, having raised a lot of money, built a number of companies and sold a number of companies successfully. So we know how to create value. There is still substantial upside in the Twin Hills project. So we're still drilling right now. Actually, we started up again a few days ago. We've still got a large amount of drill holes and assays in the system, which will come out over the next few weeks. So with the technical studies, PEA, pre-feasibilities, mineral resources that will come out over the next few months, Twin Hills on its own will grow significantly. We think we are one of the best sort of risk return opportunities out there, mainly also because our valuation is so low. So you're getting low risk, lots of upside for a very cheap valuation. And of course, we hope that through ongoing de-risking and delivery over the next couple of months, especially in the first 6 months of this year, which is catalyst heavy, that our valuation will re-rate. So I think an excellent opportunity for investors to get in. And of course, opportunities like Ondundu, which we'll talk about in a bit, will make our projects better and give us an opportunity to grow and scale and diversify. Just briefly on the capital side of things, to remind you, we still have a fairly tight share structure. It's actually, this is slightly outdated. We did a financing, $10 million financing in November, December. We've got about 120 million shares out now. Have an enviable cap structure, about a third insiders, including Ross Beatty and 2 other billionaires. We have the who's who of Canadian and North American institutional shareholders for about a third of the company. And then we've got a very strong retail following, a lot of people that like what we're doing. We do also have good broker support. So we appreciate the equity capital markets and the stockbrokers. They're very important and they are an integral part of our success. You can see the names that are covering us there. And you can see, obviously, we're trading substantially below target prices of this group of investors. Share price wise, it's been a difficult time. I don't have to tell your listeners I don't have to tell this to your listeners. They know themselves that gold has been in the doldrums for a while, but I think relative to the indices and relative to our competitors, we've actually traded quite defensively, which I think is testament to the quality of the projects and the quality of the company, and also it's the low valuation is one of those reasons. So I think lots of upside there. We're well funded. We can do the Ondundu transaction with our current cash position, and we can continue to advance the projects with what we have. Important to point out here, we actually currently we in a period where we have some warrants which are about to be exercised at the end of January. So some of that might be reflected in the trading. But that warrant exercise, if all those warrants exercise by the end of January, will bring in another $8.5 million or so on top of the sort of $12 million of cash position that we currently have. So really in a good position. So just very briefly on Namibia to remind you. So Namibia is an emerging gold jurisdiction, hasn't had a lot of attention in the past, other than the incredible success that B2Gold has had with their Otjikoto project up in the north, which you can see on the slide. It's a sedimentary belt, Pan-African age rocks. The belt is called the Damara Belt. It's mostly covered by sand, Kalahari windblown sands and calcrete, which has made exploration difficult, and that's the key reason why not more has been discovered. And Osino has been at the forefront of developing really innovative exploration techniques, which have resulted in the discovery of the Twin Hills project that we've made, which we're very proud about, and that Geologic Centre's Dave and his ex-colleague John Andrews credit. So very well done to them, and Dave will talk to you some more about it. Ondundu sits in the same belt, so we'll come back to you. It's geologically very similar in some respects, different in other respects. We'll summarize that later. But we have no doubt that Namibia will produce additional discoveries in the years to come, and Osino might be making some of those. So in terms of jurisdiction, of course, another major benefit of being in Namibia is just the sort of political risk, or the lack of political risk in Namibia. You probably would have seen some of the action in other parts of West Africa where B2Gold operates, and others where political risk is high, risks about access, security, title, etc. And Namibia really stands out in this respect. I'm a born Namibian, as you said, Kerry. So of course I would be partial to this country, but I have to say here, Namibia is safe. It's very stable. It's got very well established mining industry, cadastry, etc. So we're very, very happy there. It's a very low risk jurisdiction, and I would call it truly the Switzerland of Africa. So it's very nice to be able to acquire another project in Namibia, which is of course our backyard. So we know how to navigate this place. You can see on this slide as well the Twin Hills project. That's our current cornerstone project and will continue to be our cornerstone project. Ondundu, as I said earlier, is an accretive bolt-on acquisition, which hopefully we can integrate into the Twin Hills development. So one of the concerns we've heard from retail investors and others was that some people felt that they were concerned that Ondundu might detract from the fast-track development timeline of Twin Hills. And I just wanted to say that that would not be the case. Our focus very much will continue to be on Twin Hills, but we will use Ondundu to try and make Twin Hills bigger and better. It's relatively close to Twin Hills. It's about 120 kilometers by road. It is certainly not truckable in terms of the run-of-mine ore. So it is not a next door, just truck it to Twin Hills and chuck it in the process type of opportunity. It will require concentration on site at Ondundu, and hopefully we can come up with a processing route whereby after that concentration at Ondundu, we can truck a concentrate to Twin Hills and as I say, make Twin Hills production better that way. Infrastructure is there. There's fairly good roads, so this should be doable. Of course, we haven't done this yet. You know, I must mention this here. We've only just announced the transaction. It hasn't even closed yet. It's probably going to take about 3 months to close. There are a bunch of regulatory approvals that we have to fulfill before the deal can close. We do have a good relationship with B2Gold, who've done an excellent job at bringing the project to where it is now. And we hope that they will allow us to get stuck in even during the closing period already, so that we can advance the Ondundu project as quick as we can. But that is not guaranteed at this stage. So this is kind of northern Namibia with the key gold operators. All the blue colors is the Osino existing license position. The pink color is B2Gold. You can see the Otjikoto gold mine at the top right there. That's a very, very successful, very productive and profitable tier 2 operation. It makes up about 15 to 20% of B2Gold's production. It is arguably a $1 billion company. We sold it to B2Gold at the development stage for $200 million. And Osino, what we're doing with Osino at the moment really is very much looking to do it again, trying to create another Otjikoto, trying to create another quality tier 2 opportunity, which either Osino will develop ourselves or we will partner with others in future to bring that Twin Hills project into production. And that will all be driven by value. Of course, this is where Ondundu comes in. I mentioned it earlier. Ondundu provides an opportunity to make Twin Hills bigger and better, and also just to make Osino as a company bigger and better. As I said, one of our shortcomings is having, in inverted commas, just 2.5 million ounces currently. And with Ondundu, I mean, this is, I have to say, I mentioned the disclaimer earlier, it's all, hasn't, you know, this is speculative. The 43-101 work has not been done yet, but we believe very strongly that Ondundu has the potential to become a 1 to 1.5 million ounce deposit. So that's a, 70-80% immediate uplift in resource inventory for the company. So that sort of scale is very important for the large institutional investors who we are talking to. Okay, so just very briefly, a couple of comments on Twin Hills. It currently has a PEA out. It's got 1.9 million ounces and 43-101 compliant resources. We expect to put out a new resource report and a pre-feasibility study in around April that will bring in significant resource growth at Twin Hills only. And of course, it will substantially further de-risk the Twin Hills project. It should also bring to book a substantial growth in production. Just to remind you, Twin Hills is around about 100,000 ounce a year operation as per PEA. It's not an opportunity as described in our PEA. And the next study will hopefully indicate a very significant growth in that annual gold production number. So that's the PEA. I'm not going to go through the numbers again. This is all public. This is 43-101 compliant. It's got a current valuation, DCF valuation of around just under $400 million. That's Twin Hills as it stands right now. We believe with the pre-feasibility study that will come out in April that there will be substantial growth to that. Obviously, I can't say how much growth, but it's going to be very substantial, and that will be delivered in April. That, again, is just making Twin Hills bigger and better on its own. Ondundu if we can come up with a feasible processing route for it, which I think is highly likely, obviously we've done our homework, then that will be the next leg up for the Twin Hills project, and with a bit of luck might get us to somewhere between 150 and 200,000 ounces of annual gold production. Now, you know, if you look at some of the comparative companies out there in Canada or in the rest of Africa, 200,000 ounces of gold production per year, that's $1 billion company. We are currently valued at 100 million US, or just over 110 million US. So that's the very substantial valuation gap and the opportunity for upside that Osino provides, with protected downside, being heavily de-risked geologically and technically. So that really is the summary of the opportunity. Just a little bit of a couple of words on the quality of work that we're doing. Obviously, we're working with best-in-class consultants who are helping us develop this project and pushing it forward, starting with Lycopodium, who are really the Mercedes-Benz African gold project builder, and a bunch of other companies, you know, helping us deliver the Twin Hills project, and we will use the same consultants to advance the Ondundu project. I'll skip over these slides. That's all Twin Hills. And so in summary, before I get into a couple of slides on Ondundu, so I think we've got a high value project that just keeps on getting better, and Ondundu will provide an additional substantial leg up. It is technically very simple and low risk, with low capital and operating costs, low valuation, and very importantly, I should mention this, reliable and trustworthy management. I'm very proud of the fact that Osino has built a reputation for delivery and execution, and I think that's ultimately what drives value. And we will continue to do just that with Twin Hills and with Ondundu. So to remind you, Twin Hills, that's the district down there in the square. I don't know if you can see my mouse, but that's Twin Hills. So Ondundu is up there. It's about 120 kilometers away on a good road. It's a little bit closer to us than it was to B2Gold. A lot of people have asked why us and why not B2Gold? Why did they sell it? It's a classic case of it was too small for them. It wasn't game changing for them. They thought it could be. They realized that the exploration upside was somewhat limited, and they did not. It was too small for them to be seen as a mining opportunity. Whereas for us, it's obviously very different. For us, it's a game-changing opportunity, and it plays to our strength of innovation, execution, delivery. So I think we are ideally placed to turn this project into something and to integrate it with our existing Twin Hills project. Okay, before I get into that, maybe just a bit of history. So Ondundu is actually the oldest known gold deposit in Namibia. It was discovered in 1917 by the German colonials. It has it is geologically somewhat similar to Twin Hills in that it is in the same belt. It's sedimentary hosted, structurally controlled, but it's quartz vein hosted. So it's much higher grade, but also much more nuggety than Twin Hills, and that's actually where the opportunity lies. From an exploration perspective, what I've just said, that means that its upside might be somewhat limited because, as Dave will tell you, the wall rock is not mineralized, etc. We'll go into a bit more detail. But from a technical mining and optimization perspective, the nuggety nature and the very high gravity recoverability or amenability for gravity recovery is exactly the opportunity for us, because it allows us to potentially come up with a concentration option at Ondundu and then trucking the concentrate over and to process the back end at Twin Hills. So it really is an amazing bolt-on that was an opportunity too good for us to pass up on. Yeah, so that was the history. So 1917 discovered. Sorry, I'm just reading off my notes here. It's had about 20 years of historical production in the 1920s and 30s. There was actually a mini gold rush, mainly just diggers looking for placer gold, looking for nuggets. And in fact, one of the Ondundu nuggets, this is just a piece of interesting trivia, is displayed in the Smithsonian Institute in Washington. So that's just testament to the nuggety nature of this deposit. But of course, for larger scale operators like B2Gold or for us, that's not of interest. We want to mine this at a much bigger scale than the artisanal scale that they mined it at in the 1930s. And then in the sort of subsequent decades, 40s, 50s, 60s, 40s and 50s, predecessors to Goldfields had it. Then, gold went to the gold standard. Gold prices were too low. It lay dormant. And then in the 1980s, when gold ticked up, Goldfields actually acquired it, did some further work, and they came up with a round about 500,000 ounces at about 3.3 grams per ton. Never got developed, probably because of its size. It then had a succession of other operators and owners who didn't do much with it. One of them was Forces Metals, a uranium company. And B2Gold then 6 years ago actually earned into it and said, let's have a proper go at it. B2Gold did some excellent work on it. They spent about $10 million over 5 years, drilled 45,000 meters, and effectively got it to the resource stage. They just didn't put out a resource because obviously B2Gold, being a diversified senior gold company, not so 43-101 or not so driven to publicly report, etc. They did things privately, but they did drill 45,000 meters and they really defined this project. However, they made a decision that it was too small for them. It fell between the cracks, and we registered interest some years ago already. And B2Gold came to us and said, are we interested in acquiring us? And we made a proposal to them. So effectively, we are buying the potential for very quick resource addition, 43-101 compliant resource addition, hopefully in 3 to 6 months, in the order of up to 1 million ounces, maybe 1.5 million ounces at most, for around $13 per ounce. We paid $15 million in partially deferred and staged payments. At face value, relative to our market cap, that may seem expensive, but if you consider that that is the same as the cost of discovery of Twin Hills, around about $13 per ounce, which is extremely low. I mean, the international cost of discovery of gold ounces at the moment is between $40 and $65 per ounce. We developed Twin Hills at around $13 per ounce, and we're acquiring Ondundu for around $13 per ounce. So that gives you a sense of how cheap it actually is. Most of the heavy lifting has been done by B2Gold. They did an excellent job doing surface exploration, and they did lots of drilling, which is available for us to convert into a 43-101 compliant resource as soon as we've closed the transaction or roundabout there. So that's the history. In terms of geology, I'll let Dave talk about that some more later. And in terms of the rationale, I said it's a bolt-on acquisition. It gives us the opportunity to grow from 2.5 million ounces soon to maybe 3.5, 4. Obviously, this is non-43-101. We haven't put these ounces to book. It's all conceptual, etc. So bear in mind all the disclaimers. But with 3.5 or 4 million ounces, maybe in 6 months' time or so, Osino is a very different company. It has project diversification, 2 projects rather than 1. And it's got the opportunity to deliver the production growth at Twin Hills that I spoke about earlier. And that is why this project is so accretive to Otjikoto, and why I'm so convinced that it is it is so accretive to Osino. And that is why I'm so convinced that it is an excellent transaction, a game-changing transaction for Osino. And we will certainly bring it to book. So just a couple of slides. This is, a bit of technical. I'll come back to it when Dave talks. It's, geology over there. In fact, let me move on. I'll let Dave talk about this. And these are just some site photos. There you can see extensive underground workings that were developed by the colonials and in the 30s and 40s and even in the 80s, mining that nuggety gold. It's been extensively drilled, extensively mined actually. It's got some very good exploration site infrastructure, but it is in a fairly remote part of the country, but not too far from where Twin Hills is. This is a typical cross section. So these are sort of, this is a resource model that B2Gold created. In fact, it hasn't been published. So this is just indicative at this stage with pits and so forth. So the gold is definitely there. It's definitely mineable. It definitely will be profitable. We just have to put this all on paper and do the studies and demonstrate it. So I'll pause there. Bill, maybe back to you.
All right, thank you for the questions that have come in so far. Dave, if you want to turn on your microphone, and we can start with you talking about the geological prospectivity of this project you just picked up. And as Dave begins to share about the geological prospectivity, just continue to have your questions come in, and after that, I'll begin to present your questions to Dave and to Haya.
Hi. Yeah, so as Haya said, this project has had some really good exploration done on it by B2Gold over the past 5 years. They've done quite an intensive soil sampling and stream sampling exercise, and drilled a number of shallow holes. And it's fair to say that there's a lot of gold on this project, apart from in the main sort of area of where the resource is going to be. There's quite a lot of other quartz veins, mineralized quartz veins around, which have been identified and have seen a little bit of shallow drilling. So we'll definitely review that work that's been done and probably do some more drilling and see if we can get any of these areas to stack up. And then I think perhaps more exciting is that this current mineralization consists of 2 shallowly plunging chutes which plunge towards the south. And as you will know, these kind of simple orogenic deposits usually consist of plunging chutes, and there's always more than one. And so far there are 2 slightly offset chutes, but there's definitely potential for further chutes, particularly to the south. As it's plunging to the south, it's entirely possible that there are further chutes which don't daylight quite to surface as you go further south. So we'll be doing some investigations. We'll be doing some planning over the months to come, and then as soon as we can get on the ground, we'll do some exploration.
All right, thank you, Dave. Haya, first question, were there any other bidders for this project?
We don't know. Of course, B2Gold didn't tell us that. I think there were. There's some sort of M&A activity happening in Namibia. We've got this neighboring gold mine called Navajo, which, let me correct, we don't have it. There is a neighboring gold mine called Navajo, which used to be owned by Anglo, currently owned by a private equity group, which it's a well-known fact that that's in a sales process at the moment. So we expect that whoever is looking at Navajo will be looking at other Namibian opportunities. But having said that, the problem with Ondundu always has been its size. It's always been seen to be 500,000 ounces, maybe 700,000 ounces at nice grades, but with limited or with somewhat limited exploration upside, certainly less exploration upside than Twin Hills. And that's why it has often been disregarded, I guess, by other operators. And we've got a unique angle because Twin Hills provides the sort of cornerstone operation that could allow a co-development of Ondundu, and that's why I think we had a unique angle, and I think that was one of the reasons why B2Gold probably elected to go with us. But I would imagine that they ran their own internal process and that there would have been other bidders.
Haya, what can or cannot be inferred regarding your relationship with B2Gold from this transaction?
Yeah, in the retail sort of chat rooms out there, and on Twitter and elsewhere, there's been a lot of discussion about this because many observers made the assumption that, or they were looking for signals. What does this mean in terms of the relationship between B2Gold and Osino? But let me debunk most of that, because the reality is that we have a very good relationship with B2Gold. Obviously, we know them well. They know us well. I previously sold a project to them. And we were under CA with B2. They continuously look at what we're doing, as are many other mature and other even senior gold companies. Anyone interested in growth, which most gold companies are, is always looking around. That's just normal business practice. I think in this case, B2Gold sold this project to us mainly because it was a very nice way to find a home for it, recoup their capital investment, and at the same time maybe get a small foot in the door with Osino and be in a position where they can watch what we do and then make a decision at some point in the future whether they want to engage us further or not. I think that's all. So I wouldn't infer anything else into it. I think a lot of people, of course, are interested in what happens with Twin Hills, what happens with Osino. But I can tell you that question will be driven primarily by the quality and the delivery of the Twin Hills project. How big is it going to be? When will it be de-risked? And what will be the price at that time? And how is it going to get developed? I think that will drive the question around what happens to Osino. I think, and the range of possibilities is Osino could continue to operate, develop, let me rather say Osino could continue to advance and develop the Twin Hills project and the Ondundu project, and potentially develop both of them in a staged manner and actually become a single or two asset producer. I think that's the one range of possible outcomes, or on the one end of the scale. On the other end of the scale is the expected and maybe the wished for outcome by many shareholders or investors, that Osino might become subject to M&A. And I think that's quite possible. But it will all be driven by share price value in the end. You know, that's our job here, is to create shareholder value. We will not fall in love, or we've never fallen in love with the projects that we own. I do believe in the long term, it is in the best interest of shareholders if we find a credible operating partner, but we will only do it if we get value for the projects that we have. I think we've done a great job finding and making bigger and better assets out of nothing, to Dave's credit and the technical team's credit, and we want value for that. So sorry, that was a long-winded response to your question. So in short, we've got a great relationship with B2Gold. We speak to them continuously. They certainly are not ready to do anything with us at this stage. There are no discussions, but of course they're in country, so they would be looking at us naturally.
Okay, next question. Yes, next question. Is it within the realm of possibility that you would do a combined bankable feasibility study for Ondundu and Twin Hills? If so, with your timeline, how far back would this push the Twin Hills definitive feasibility study?
No, I think it's unlikely that, well, let me rephrase. Look, firstly, the short answer is we are not going to delay the Twin Hills feasibility study. It's very important that we deliver Twin Hills on a standalone basis. Ondundu will be co-developed, firstly by defining a resource, which I think is possible in the next 3 to 6 months, and thereafter by doing a PEA on Ondundu on a standalone basis. We have to figure out what we are allowed to do under 43-101 in order to integrate that with Twin Hills. But before Ondundu can become subject to a feasibility study in terms of the regulated meaning of that word, it has to be drilled to the indicated level. So it needs another 30,000-40,000 meters of drilling in order to get it beyond the inferred stage. And we're not going to commence with that anytime soon. So for now, the technical work on Ondundu will be conceptual in nature, like PEA level, and Twin Hills will continue to be pushed along the development path as we always intended. It will be fast-tracked. It will not be slowed down. But of course, why I was cagey at the beginning of the response to your question is, of course, we are looking for a way to integrate Ondundu with Twin Hills. But there are limitations, what we can do under 43-101, etc. So I think for the foreseeable future, they're going to be they will be advanced study-wise in parallel rather than jointly.
Haya, you've mentioned Navajo, and there was a number of questions that came in here regarding Navajo. When will the Navajo outcome be made final and public? Another question, Haya mentioned farm acquisitions as a potential upcoming catalyst. Could you elaborate? Thank you.
Yeah, so on Navajo, of course, I'm the wrong person to ask because I'm not running that process. That process is being run by a large international bank. Osino participated in that process. We always liked Navajo. We always felt 1 + 1 could be much more than 3, but only for a good price. So we fell out of that process at some stage. We might come back into it in the future. Who knows? That's all in the stars. We've heard that the process was supposed to come to an end sometime around now, sometime in the next few months. And that's all we know. I really can't say anything else. I know the process is ongoing. I know a bunch of entities are still looking around. We're not there anymore. But as I say, we might be there again in the future, but that's all speculative. We would only do that if we can get excellent value, similar to Ondundu. We find Ondundu as a much more digestible bite than Navajo, of course. Navajo would be completely transformative for us, but it would blow out our share structure, etc., etc. So therefore, Navajo, yes, don't know where it is. I expect that I'm sure we'll hear more in the next couple of months.
Next question. Or did you want to have anything more to add there, Haya?
No, that was it. Sorry, what was the second question?
Farm acquisitions. Haya mentioned farm acquisitions as a potential upcoming catalyst. Could you elaborate?
Yes, that's a key catalyst. We have actually agreed the terms of that acquisition with the two owners. The acquisition is still subject to some Namibian regulatory approvals. Once those approvals have been achieved, then we can announce it, because at the moment there's no certainty that we will achieve it. So that's the formal answer. Of course, we think we will achieve those approvals, and we're far down the track with achieving them. So I do think in the next month or two, the farm acquisitions will be announced. And that, as I've always said, is a major de-risking step for the project. It will require some capital, and we'll announce that in due course. Yeah, so that's on the farms. Maybe another question, I'll throw that in there, Bill. It has been answered. It has been asked. It might come up later. So that's a key de-risking step. Another key de-risking step is, of course, the mining license and the permitting. We submitted a mining license application in August last year. We always said that we thought that the approval process would take around about a year. The main deliverable into that process is an approved ESIA, an environmental social impact assessment, which we've done. It's been submitted. It's currently in the regulatory approval process. Once that's done, we will get what is called an environmental clearance certificate. We expect to achieve that in the next sort of 2 months, 3 months. And then it's open. From that point on, the Namibian government could approve our mining license at any time. Of course, we can't force that, but we do expect that from around about mid-year, that could come in. So if you consider then by mid-year, we should have a largely de-risked project with surface rights in place, mining license hopefully in place, an advanced pre-feasibility study, and being on the cusp of a BFS, we expect and we hope that that will result in substantial re-rating of the share price. Of course, financing, drill results, and various other catalysts will come in between. Utilities, water, power. There's so much going on in the background that we will be updating the market with in the next few months. That's all de-risking the project. And then on the BFS, I don't want to be pinned down on the timeline for the BFS because, of course, it could be influenced by Ondundu and some other things. It doesn't make sense to rush a BFS on Twin Hills if there's other upside that could be brought in. But I think the key event to look for is the pre-feasibility study, which will come out in April, which will largely define what Twin Hills will look like and feel like in the future. All right, back to you.
Thank you. Regarding the development costs of Twin Hills, just in the economics you've done thus far, yeah, a lot of Canadian and US listeners are on the call right now. We're feeling the pain of inflation. Can you talk to how inflation is affecting Namibia, especially Namibian mining? How are you seeing that affecting the economics?
At the moment, I can't talk definitively about that because I haven't actually got the numbers. I mean, at the moment, we're still just, in inverted commas, an exploration and development company. So we haven't bought steel or mills or long lead items. So far, Namibian inflation is where it always used to be, around about 5-7%. You must remember that's in local currency. We somewhat hedged towards US inflation because of exchange rate variations. So yeah, we haven't really seen inflation in Namibia. I think the capital cost estimate for the pre-feasibility study that's coming out in April will give you the answers that you're looking for. At this stage, it doesn't look like there's going to be major unit cost escalation, but of course the capex is expected to be quite a bit higher than the PEA capex, but that's because of the increasing scale that the Twin Hills pre-feasibility study is being done at. Remember, the PEA was for a 3.5 million ton per annum operation, which is a large tier 2 mill, but the pre-feasibility is being done at 4.5 million tons per annum, which is 25% uplift. I don't think that the capex uplift will be proportional to that, i.e. it shouldn't be 25%, it should be less than that, but I don't have those numbers. We'll have those numbers probably in around 2 months' time.
Okay, regarding Ondundu, any particular reason other than the limited scalability that B2 would perceive? Any other reason why they would not progress the project? In other words, are there any warts on this project that perhaps you didn't put in your press release or have stated thus far?
There are no direct warts as such. It's as Dave explained, it's well understood. It's had 100 years of mining, exploration, and development work. It is really a well understood animal. It does have upside, somewhat more limited than Twin Hills for some of the geological reasons that Dave explained. But I think its main problem, so to speak, is the fact that previous operators really struggled to increase it from 500,000 or 700,000 ounces to beyond 1 or 1.5 million ounces. So for a mid-tier operator, it arguably potentially is too small. And that's where Osino comes in, because in a co-development scenario with Twin Hills, it becomes a bolt-on to Twin Hills. And that's why I think we are uniquely positioned to turn Ondundu into value. You must also remember B2Gold being a large senior gold producer, that their decision-making criteria are very different to ours. I mean, they employ capital budgeting. Just to explain that briefly to your listeners, B2Gold has a $30 or $40 million exploration budget worldwide. For them, Ondundu is an exploration project, and they have to spread that $40 million around globally to 30, 40, or however many opportunities they have elsewhere. And so the structure of the earn-in deal that they had, which required a substantial option payment of around $7.7 million, which they're making, made it unattractive to them, and that's why it fell through the cracks for B2Gold. For us, the decision making is very different. We see it as a bolt-on, we see it as transformative, and we see it as becoming a core part of our business, and that's why the hurdle rates and so forth and everything is different when we look at it. I think it's a classic example of projects that get overlooked by big operators for obvious reasons, that then get improved and advanced by juniors and ultimately get turned into successful projects or co-development opportunities, as in this case.
Finance question: does this deal, because you have to come out of pocket with some cash, does it move up your next financing, or are you confident that you will have raised substantial money through warrant exercising in the near term?
Short answer is we don't know. The reality is that in the next 6 months of this year, we will have substantial capital needs in addition to the usual sort of burn rate that we have. I mean, we have, for example, the farm acquisitions. We've got to make a down payment on power for the Twin Hills project, and then we've got these stage payments for Ondundu. So I do expect that we will do a financing at some stage. Of course, the markets are not great at the moment, and we do have these warrants coming through. So the warrants are quite concentrated. They're mostly held by a number of very long-term Osino shareholders. So we do expect a high rate of conversion, which will put us into a comfortable position. But obviously, I can't predict the future. So therefore, I do think that in the next few months, at some stage when the market is right, we might do another financing. It's likely we'll do another financing, but as always, and as we've done in the past, we'll do it when people expect it the least.
You've said in this presentation that you compare Namibia to Canada in terms of political risk, and one person asked the question on a scale of 1 to 7, with 1 being low risk and 7 being high, how would you enumerate Namibians as Namibia for political risk?
Ooh, now you put me on the spot. I mean, political risk is it's a big basket. To me, the political risk entails security of tenure, social risk. It's also political, like what's the chance of upheaval, coups, the kind of stuff that you're seeing in West Africa. I think on that scale, I would rate Namibia almost 7 out of 7. I think there's a negligible risk of major political upheaval in Namibia in the short term. There's a very low risk of loss of tenure or losing licenses or losing projects. So probably 5 or 6. There's always some risk of policy adventurism. There's always some risk of populism, as you have in Canada, or less so in Canada, maybe more so in the US. maybe tax rates, royalties, that good sort of stuff can always change. Namibia is probably on a scale of maybe 4 or 5 out of 7 on that scale, so quite manageable. But I think that's no different in the rest of the world. So all in all, probably 5 out of 7. You know, to summarize it, I would rate Namibia.
Okay, Haya, that's all the questions we have right now. Is there anything you would like Dave to share or elaborate on regarding what we've spoken about here today?
I'll let Dave make any further comments if he wants to.
Dave, would you like to chime in with anything?
Yeah, maybe just a couple of words on exploration upside at Twin Hills, which we haven't really talked about at all. So apart from the resource that we've put on the table now, we are currently doing quite a bit of drilling at Twin Hills West, which is 2 kilometers to the west of the major part of Twin Hills. And we did put out a press release a couple of months ago announcing the discovery of Twin Hills West. And we've currently got 3 drill rigs on site there. And we are going to add we're going to add to the resource, to the overall resource from Twin Hills West. We probably just in the inferred category. We'll see how far we get with it. But I think when we do the PFS and the new resource, you'll see some addition from the Twin Hills West project. And then just 2 kilometers to the south of Twin Hills, we have a large piece of ground. Maybe you could just put up that slide, Bill.
Actually, I'm trying to, Dave. Give me a second.
Oh.
I'm almost right there where the question marks are, Dave. I put them there.
Yeah, so we have all the ground immediately to the south of Twin Hills, as you can see on that slide. And that covers a large piece of stratigraphy which hosts the Navajo gold mine. So if you see Navajo down to the southwest, it sits between the pink granites and the blue marbles. There's a wedge of sediments that sits between the two of those, and that hosts a Navajo gold mine. And we have a very large chunk of that stratigraphy, and it's almost all of it is covered by calcrete and sand. So it's never really been explored. So we are doing some fairly aggressive exploration there at the moment. We're trying to see through the calcrete. We're doing some shallow drilling, and we're taking calcrete samples. And I'm quite excited about that exploration as well. That could be a real game changer, and it's really a stone's throw away from where Twin Hills is at the moment. So that's where our exploration and upside will come from over the next months.
Excellent. Any further thoughts, Haya?
No, I think Dave summarized that well. Maybe I'll just give Dave a real shout out here in that the sort of terrain plays to his strength. Dave is a structural geologist. He's been a deal scout and an explorationist for a number of companies, you know, from AngloGold, Newmont, various others. And his key strength is the art of exploration. It is to sniff out these opportunities and then to conceptualize exploration programs, iterative programs that kind of, in inverted commas, unearth these opportunities. So yeah, it's great fun working with a credible team that can do this sort of thing. And yeah, Dave is always full of ideas and lots of other upside and other things elsewhere in the country that we're going to get into in the next couple of months.
Excellent. Well, Kerry, I'll hand it back over to you.
All right. Well, a very impressive presentation here. I mean, like said, we've been long-term shareholders, and presentation had me thinking about acquiring even more shares. But I think you can see from this that Osino is truly on the move. The opportunities are out there, the de-risking moves that are being taken, tight share structure, strong shareholders, large insider position, which is something we always look at because we want management's interest to be aligned and conjoined with shareholders. And most importantly, got the finances in place to execute your plan, Haya. Really, since I've been following the company, you've been finding more and more gold almost uninterrupted for the past couple of years. So look, if you want to watch the presentation again or you missed a part of it, you will receive in a short while a link so you can rewatch it or pass it on to people you think might be interested in it. Appreciate you all joining us, and go over to the company's website, OsinoResources.com. Sign up for notifications so you can get the latest news on the company's progress. Bill, Haya, Dave, thanks so much, and that concludes our webcast.